Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, how can I ensure that I won't lose money through trading? Answer by Dirk Boshenk. Short answer, don't trade. When you get into trading, you need to enter it with a good mindset or it will slap you sideways. So what does that mindset consist of? You will lose money. This is one of the biggest issues. Everyone always tries to find methods of not losing money, which is great, but veers a person off course and forget that losing is part of the game. It's accepting the losers as part of the winners that makes it mentally easier. Accept them and respect the losers. Every moment in the market is unique. We fear to enter new trades because the setup looks similar to one that we just took before and lost on. So we tend to carry those emotions with us to the next trade, which then influences us to either take or stay out of the trade due to fear or greed. Don't trust your broker. They are there to make money off of you. So they will get you to trade as often as possible. Some will even give you inside advice in some units or instruments. Be extremely aware if they give you a hot tip on a unit. I have had a few clients lose a lot of money listening to a broker. True odds only show themselves after a numerous amount of times. Testing your system for only a week or month will form an extremely biased system based on only recent movement. Chances are it will only last for a few weeks, if even before the account is gone then. A system is best prepared when taking as many market situations into the equation as possible. This means chart data for backtesting. The further you go back, the longer the odds it tends to hold up. There are still a load more to tackle. Like limiting beliefs that could get you to self-sabotage yourself. Eva listed some of the most important ones that could help. Once mindset is tackled, it makes the learning process more efficient. Because instead of finding the best systems to trade with, you focus on finding solutions to the current issues you are facing and you're trading with your own systems. This gets you way more involved in finding out the nitty-gritty of what you need to know instead of chasing after something that doesn't exist. What I'm trying to say is that there is no way around losing money when trading. You only manage how much you lose applying the needed techniques. So to minimize losses is what it's all about. How do we increase winners, turn losers into profits, or push a hit rate even higher? This is where a lot of the work lies. It's the ability to identify odds of your system as well as possible weak points to targets and fix. Remember that with trying to fix particular issues, we sometimes open up new ones by making changes. It's a process of elimination. So best advice apart from knowing what you need to then, stay disciplined. All the best. Answer by George Torpos. You can't, but there are ways how you can minimize the chance. 1. Long-term investing instead of trading. If you invest on the long run, for example in the stock market, after 10+ years investment time you will have a high chance that your portfolio will worth more than your initial investments. But during these 10+ years you need to suffer temporary unrealized losses, e.g. during a market crash, and you need to remain patient in these days, patience meaning not selling out your portfolio. At the end of the day, market always regains its pre-crash levels. Time horizon is the only question. 2. Invest in safe bonds and hold them until expiry. If you invest into a really safe bond where the chance of default is really minimal and you hold this bond until its expiry, then again not losing money has a high probability. A good example for a really safe bond is a US Treasury. 3. Stop loss. If you still want to trade, then you can use a couple of loss minimizing tools. One of the most known is the stop loss order. If you would like to read more about the difference between trading and investing, here is a good blog post about the topic. Are you investing or are you trading? Know the difference. 1. Footnotes. 1. https://brokerchooser.com/guide. Answer by Johann Marcus. You can't completely eliminate the risk of losing money through trading. But there are some ways to hedge against it or lessen its impact to your portfolio. How to hedge the risk of losing money. Start small. Do not go all in when investing. Instead of simply throwing all your money in the market at once, start with whatever you are comfortable with and build from there. That way, you can start developing your strategy without risking too much if it doesn't work out. Also make sure that you only invest what you can afford to lose. Set aside emergency funds and some cash enough to pay for your bills. Invest only the money that you aren't planning to spend anytime soon. Dollar cost averaging. The market undergo through some ups and downs. There is no assurance when is the right time to enter and exit the market. To take advantage of this behavior of the market, try investing through DCA or dollar cost averaging. With this strategy, you can start with a small amount, and then automatically invest the same amount at regular intervals. Starting with any small amount could end up with a significantly huge amount after some time, while eliminating the various emotions you usually experience in investing. Diversify your portfolio. Avoid investing heavily on a single asset. Diversify your portfolio by investing in various securities, or opt to invest on funds to get instant diversification. This way, if the market turns down one of your assets, it won't have as much impact to your portfolio compared to focusing only on one investment. Go long. The best way to lessen the risk in the market is by being a long-term investor. Not only would you be able to control the amount of returns that you're already satisfied with, but you can also ride out most of the ups and downs of the market. Historically speaking, most investors had more benefit when investing over the long run. Ignore your investments now that you are planning to stay invested for a long time. There is no reason to check your investments every minute since you are not planning to exit anytime soon. Lessen your anxiousness by letting your investments grow by themselves. Still, take time to rebalance your portfolio every now and then, but avoid making rash decisions over temporary market adjustments.